Hello and welcome to the Workplace Gender Equality Agency's information video, which will give you an overview of how to report employee types and their pay in the payroll-aligned workplace profile. This video is intended for employers who are completing the workplace profile section of the Gender Equality Reporting Program and have chosen the payroll-aligned workplace profile. Please watch our other information videos if you would like help with inputting employee types and their pay in the unit level workplace profile, or if you would like a general overview of gender equality reporting. This video will start with an overview of the workplace profile and then demonstrate how to enter salary and remuneration data onto the payroll-aligned profile for different employee types. Finally, the video will cover what happens when your profile is uploaded and how to resolve any issues. So now I will give you a brief overview of some key concepts to help you complete the workplace profile. The first step is to choose your snapshot date, as this will allow you to work out which employees need to be included in the workplace profile. You will then need to gather the pay data for each of these employees. The process for reporting salary and remuneration data differs depending on which workplace profile template you use. I will now go into each of these concepts in a bit more detail. To start preparing your data, you will need to choose a snapshot date for your profile. The workplace profile provides a snapshot of your workforce on any one date during the 12-month reporting period. That is the 1st of April of the previous year to the 31st of March of the year your submission is due. You are free to choose any snapshot date within the reporting period for the submission of your workplace profile. You will need to report the pay data for employees employed on your snapshot date based on their earnings from the 12 months prior to that date. This example shows a snapshot date of the 30th of June. For this date, the workplace profile would include salary and remuneration payments paid during the 12 months prior to 30 June. Your questionnaire and workforce management statistics submissions always relate to the full reporting period. That is the 12 months between April 1st and March 31st of the following year. To keep things simple, most organisations choose the 31st of March as their snapshot date. This means that the answers in your questionnaire, the data on your workforce management statistics worksheet, and the workplace profile will all cover the same period. The workplace profile will be populated with employees who were employed on the 31st of March. After you have chosen your snapshot date, you can populate the employees who you will be including on your profile. In short, you must report on all employees who were employed by your organisation on the snapshot date, even if they have since left the organisation. This includes full-time, part-time, casual and temporary or seasonal workers, trainees, apprentices and graduates, foreign nationals or expatriates working in Australia under your group, and employees who have worked overseas for less than 6 months. Anyone on parental or extended leave are also included. And in partnership structures, you must include any partner who holds an employment contract. If you are a corporate structure reporting on multiple entities at once, you must include every employee who works in Australia for each entity on the snapshot date. It is not intended that you populate your profile with every employee who has been employed over the course of the 12 months you are reporting. Employees who have left before or have joined after the snapshot date should not be included as they were not employees on that specific date. You do not need to include employees who have worked overseas for more than 6 months in a reporting period, partners who do not receive a salary other than the managing partner, volunteers or unpaid visitors, independent contractors, or employees of a labour hire or recruitment organisation who have been assigned to work in your organisation. Some organisations that do not meet the typical organisational structure may have more complex rules for who is or who is not an employee. You can search our Knowledge Hub for more information on which employees to include in the workplace profile. Once you have your employee list, you will need to gather exactly what has been paid to each employee in the 12 months prior to your snapshot date. An important point is that you must base your calculations on what an employee actually earned in the 12 months prior to the snapshot date, not their contractual amount if these two figures are different. You will also need to note what payments are fixed or one-off and what are pro rata payments. All payments made to an employee in the course of their employment for this 12-month period are included. At the end of this data collection process, you should have a list of employees to populate into your workplace profile and know what they were paid in their component parts for the 12 months up to the snapshot date. You are now ready to complete a workplace profile. There are two different templates that you can use to submit data for this profile. You can use either the unit level profile or the payroll aligned file. Both files require you to start with the employee list from your snapshot date, as well as the pay information for each of those employees. You will also need to enter additional information about each employee. The columns that you see on the screen are common to both files. They are the employee ID, which is a field that's not collected by our agency. It is used by you to keep track and identify which row is which employee. The employing ABN of the organisation where the employee works. Occupational category, which is a 4-digit occupational code, and you can find a list of occupational codes on a tab in the profile. Manager category, this is for managers only, and you can find a list of manager abbreviations to use on the explanation tab of the profile. Level to the CEO, this is a voluntary column for you to indicate levels of leadership. Gender, you must enter either F for female, M for male, or X for non-binary or other employees who do not identify within a binary gender identity. Graduate apprenticeship status for employees who are part of a formal graduation program or apprenticeship. Employment status, which is either FT for full-time, PT for part-time, or CE for casual employees. Employment type, which is either permanent, contract, or casual. Year of birth and postcode, which are both voluntary to complete. And finally, industry class. This is a 4-digit code that must match one of the industries you confirm when you start your report in the employer portal. The next step is to enter the salary and remuneration information, and this differs depending on which file you choose to use. In the unit level profile, you will only need to report salary and remuneration under 2 columns, base salary and total remuneration. The figures you report for base salary and total remuneration must be provided as the employee's annualized and full-time equivalent earnings. In short, the 2 figures must represent what this employee would be paid if they had worked full-time hours for a full year. This figure is not a contractual figure, but is based on what the employee actually earned. All pro rata amounts should be calculated to this standard for both the base salary and the total remuneration field. The alternative file to use is the payroll aligned file. More data entry is required. You must provide the actual amounts paid to each employee in their component parts shown on the screen. Some payment types are split up by whether they were fixed or one-off, or whether they were pro rata. You must also provide an ordinary hours figure and an employee start date that corresponds to information you provide on the explanation tab of this file. Based on the figures provided, the template will automatically calculate pro rata payments to be annualized and converted to a 1.0 full-time equivalent amount. In short, the template will use the actual incomes and time worked for each employee to calculate the salary and remuneration, if required, to the standard for this report. Before beginning this section, a quick note to let you know that this video will now focus on the payroll aligned file. If you are using the unit level profile, please watch the agency's information video specifically for using that type of file. So, how do you enter all of this data for your employees? Firstly, you will need to collect the salary and remuneration data for your employees employed on your selected snapshot date. This list displays different payment types and what column they go into on the payroll aligned profile. You will need to enter payments once into a single column except for any base salary pro rata or base salary fixed amount. Any amount reported in these columns is also reported in the relevant OTE column. You will need to know for each employee what they have been paid in its component parts and whether each amount was paid on a pro rata basis or whether it was a fixed one-off amount. A full table can be found on our Knowledge Hub by searching for the term employee payment. The main benefit to using the payroll aligned file is that it calculates your employees' pro rata payments to their annualized and full-time equivalent amounts. To do this, you would need to enter in the explanation tab the snapshot date you have selected and the ordinary hours and time frame, for example, weekly, fortnightly, monthly, or yearly, for those hours considered full-time for the employees on the worksheet. Changing the amount of the superannuation cap for your organisation is optional. In the Upload tab, you will enter your employees' actual earnings in each of the salary or remuneration columns. To perform the calculation, the template uses the information provided on the Explanation tab and compares it to what you provide. The Employee Start Date column determines if the employee has not been there for the full 12 months before your snapshot. Any employee who has worked less than 12 months is calculated as if they had worked a full year. The Ordinary Hours column determines if the employee has not worked full-time hours. Any employee who has worked less ordinary hours than your standard is calculated as if they were a 1.0 full-time equivalent worker. This presentation will use an example to demonstrate how data is entered and calculated in the payroll aligned file for different employee types. The example is a professional role working in various employment types where 38 hours per week is the full-time standard for that workplace and the snapshot date is the 31st of March 2022. For workers who have worked the entire 12 months on a full-time basis, you should enter their actual salary and remuneration amounts for that 12-month period. In this case, the employee start date should be 12 months or more before the snapshot, and the ordinary hours should match the standard you have entered. You can see that in this example, the employee worked the entire year and earned $100,000 in base salary and $110,000 in total remuneration when superannuation is added. The template has not calculated their income and it remains the same in the final grade calculated area. If the employee worked full-time hours for less than 12 months in the lead up to the snapshot date or has periods of unpaid leave, you will enter the employee's actual earnings for the 12 months and an ordinary hours figure which matches your full-time standard on the Explanation tab of the profile. When a full-time employee has worked part of the year, the template will use the employee's start date to determine if a calculation is required. In this example, the employee worked for 6 months of the period being reported and earned $50,000 in base salary and $5,000 in superannuation. Based on the employee's start date not being for a full 12 months, the template will adjust the pro rata payments to be equivalent to working for a full year. This is $100,343 for base salary and $110,377 for total remuneration. To keep it simple in this presentation, I am just referring to the full dollar amounts, but the template does calculate the precise amount in dollars and cents. For employees who were employed part-time and worked regular days for the 12-month period leading up to the snapshot date, you will provide an employee start date which is more than 12 months before the snapshot date. When an employee has ordinary hours that are lower than your full-time standard, the template will calculate as if they had worked full-time hours. In this example, the employee has earned $61,000 in base salary and $6,100 in superannuation for 23 hours of work per week. Based on the weekly ordinary hours figure being lower than the full-time standard provided, the template has calculated pro rata payments to the full-time equivalent. The full-time annualized earnings was calculated to $100,782 for base salary and $110,860 for total remuneration. For employees that were employed part-time and worked varying days for the 12-month period leading up to the snapshot date, you will need to either find an average ordinary hours figure based on the time frame selected in the explanation tab, or you can treat these employees in a similar manner to how you treat casuals in the payroll aligned file, and refer to the casual section of this presentation. In this example, the employee worked 100 out of 260 days and earned $39,000 in base salary and $3,900 in superannuation. The average weekly ordinary hours for this employee are 14.4. As the ordinary hour figure is less than the full-time standard, the pro rata payments have been calculated upwards to be full-time equivalent. When calculated to the full-time equivalent, it works out to $102,916 in base salary and $113,208 in total remuneration. For an employee that was employed part-time for less than 12 months leading up to the snapshot date, the employee start date will be less than 12 months before that snapshot date. The ordinary hours figure will be lower than the full-time standard you have entered. The template will refer to both of these fields to calculate pro rata payments to their annualized and full-time equivalent amounts. In this example, the employee worked 25 hours per week for 8 weeks and has earned $10,000 in base salary and $1,000 in superannuation. When calculated as a full-time equivalent amount and then annualized, it works out to $92,530 in base salary and $101,783 in total remuneration. For casual employees with a casual rate for 12 months or less in the lead up to the snapshot date, if your profile is set to weekly, fortnightly, or monthly ordinary hours, you will need to determine if you can average the hours worked of each casual employee to be consistent with the frequency you select on the explanation tab. If you cannot, you should put your casuals onto their own workplace profile and set this profile to a yearly full-time standard. For example, for the 38 hours per week workplace, that would be 1,976 hours per year. On a yearly profile, you will report the actual hours that the casual worked, along with what they were actually paid for a more precise calculation than if you used a weekly or fortnightly profile. In the example, a casual employee worked 60 hours over 12 months and earned $3,300 in base salary and $330 in superannuation. In this workplace, 1,976 hours is considered full-time for the year. If this casual was put onto a profile set to weekly, fortnightly, or monthly, you would need to average the amount of hours they worked in the 12 months in respect to that time frame. When the hours are averaged and put onto a weekly template, this calculates to a full year, full-time equivalent base salary of $104,500 and a total remuneration figure of $114,950. Using the example of the same casual employee, if they were put onto a profile set to yearly, you would add in the actual number of hours that the casual employee worked throughout the year as their ordinary hours figure. The calculation is much more precise for casuals or part-year part-time workers when the template is set to yearly. The calculation here comes out to $108,680 for base salary and $119,548 for total remuneration. The variation between these two ways of calculating casuals is small, but the yearly profile provides greater accuracy. Finally, I will cover how you upload this profile in the WGEA portal and what happens to your data. When you are ready to upload your file, log into the WGEA portal and access your program from the Programs menu item. Once you have confirmed the details for your submission, you will have access to all sections of your report to complete. To upload your workplace profile, you will need to drag and drop your file into the Upload section of the workplace profile page. Your file will take between 40 minutes and a few hours to be validated and checked for any data anomalies. You will receive an email when your file has finished checking. If any issues are found, you can click on the Issues Found hyperlink on the file you uploaded. To resolve the issues listed, you will need to read the description and view the instruction article if it is not clear what needs to occur. When you have uploaded your workplace profile, and it is either free of any issues, or any issues that were found have been resolved or explained, this section will be complete. To help you complete your report, you can access resources and support from the agency. Firstly, you can explore our Knowledge Hub and select relevant topics for targeted information, or search for your questions and keywords in the search bar. If you can't find the answers you need in the Hub, you can also use our live chat function or lodge a support request. You can also visit our website to submit a support form on the Contact Us page, or explore our educational guides, tools, and resources. Thank you for watching this video detailing how to add different employee types to the payroll-aligned workplace profile when reporting to the Workplace Gender Equality Agency.